Stablecoins are sort of a skeuomorphic tool for crypto. There's something that matches our existing understanding of how finance works, but just makes it faster, quicker, better. I find that traditional investors can understand stablecoins faster than they could understand Bitcoin, and certainly faster than they understood something theoretical like blockchain, that you're trying to describe how this technology worked. It's like, no, here are dollars that move at the speed of light and settle instantaneously around the world. And people say, oh, that's cool. So I do think it's really helped with the vibe shift. I think it's made crypto real. Yeah. And it's also brought in Wall Street, which is important because it solidifies the regulatory environment for crypto, right? It's no longer crypto versus Wall Street. It's crypto and Wall Street.
The days of crypto as a chaotic, unpredictable playground are over. What's unfolding now is no accident or hype-driven frenzy. It's a meticulously crafted surge unleashed by BlackRock, the financial behemoth whose assets dwarf entire nations. When they flipped the switch, they didn't just step into crypto, they seized control and rewrote the rules of the game. This bull run isn't spontaneous. It's a precision-engineered storm designed to reshape the future of money forever. Matt Hougan, Bitwise's sharpest mind, knows this better than anyone. Crypto stopped being a fringe experiment years ago, but only now is it becoming Wall Street's secret weapon. The same firms that once scoffed at Bitcoin and dismissed blockchain are now the architects of its future. BlackRock, Fidelity, Goldman Sachs, they're not waiting on the sidelines. They're building the pipelines, the products, and the power structures that will dominate digital finance for decades. Stablecoins, tokenized assets, regulated ETFs, they're the new bricks in a fortress that Wall Street is raising around crypto. The game has shifted from wild speculation to calculated control, where every move is engineered for maximum influence and profit. Retail investors cheer price spikes, unaware they're riding a wave propelled by forces beyond their sight. This isn't just a bull run, it's a financial revolution with BlackRock as its mastermind. The old world is collapsing, and a new empire is rising, one where crypto isn't just money, but the backbone of everything. According to Matt, the switch has been hit, and the takeover is underway. Now let's watch clips from Matt Hougan's interview to gain more insight. Please don't forget to like, subscribe, and enable notifications for more in-depth content. Thanks for joining us again. Enjoy the rest of the video.
On this one, we really saw two things at work. So on the one hand, we were optimistic on the outlook for crypto. And if you're optimistic on the outlook for crypto, you think the market for companies building in this space is growing and substantial and there to be. The other factor that went into that prediction is that the IPO market was severely repressed by US regulators for the 4 years prior to this election, right? Circle, as an example, which for what it's worth has been the most successful IPO in the US in, I think, 10 years, right? It was 25x oversubscribed. The price has gone up 8-fold. It's been huge. Mm-hmm. It tried to go public for 3 or 4 years, but the SEC wouldn't let it out. And so we saw all of these firms that were substantial in size, whether it's eToro or Circle or Kraken or Chainalysis or some of the others that are in the pipeline, that were sort of just waiting at the door. So once that regulatory environment changed, we thought they would run out. Now, I do think it's primed for this moment we're in, because there are a lot of professional investors, institutional investors, financial advisors who want exposure to crypto, but are more comfortable with these companies. And I think that these IPOs and crypto equity ETPs are feeding into that group that want exposure because they know crypto is happening, but maybe their risk departments aren't comfortable with owning Bitcoin. But you can have exposure to Circle, you can have exposure to Coinbase, you can have exposure to some of these pre-IPO companies. Stablecoins are sort of a skeuomorphic tool for crypto. There's something that matches our existing understanding of how finance works, but just makes it faster, quicker, better. I find that traditional investors can understand stablecoins faster than they could understand Bitcoin, and certainly faster than they understood something theoretical like blockchain, that you're trying to describe how this technology worked. It's like, no, here are dollars that move at the speed of light and settle instantaneously around the world. And people say, oh, that's cool. So I do think it's it's really helped with the vibe shift. I think it's made crypto real.
Yeah.
And it's also brought in Wall Street, which is important because it solidifies the regulatory environment for crypto, right? It's no longer crypto versus Wall Street, it's crypto and Wall Street. And that means that Washington is now pro crypto on a long-term basis. And that's been the other major vibe shift that I think it's brought on. This is like the moment when Walmart realized it needed to build a website to compete with Amazon, right?
Yeah.
Now you have Visa, MasterCard, PayPal, Goldman Sachs, everyone realizing that they need to be ready for this era, that we could be dealing with, multiple trillions of dollars of stablecoins and multiple trillions of dollars of tokenized real world assets in the next year or two, right? I mean, it's moving at that speed. So I do think that is a major fundamental shift. I do think it's akin to the internet going mainstream. And I don't think we'll ever put the genie back in the bottle. I think now that we're through, it's now part of our mainstream financial infrastructure in a really fundamental way. And I love the analogy to Sprott. That was an example, right? Sprott was sort of like gold exposure for people who really understood and cared about the gold market. There is this group of people that are trust but verify people.
Yeah.
And they're endemic in these hard asset spaces, and they're a really important constituency. So yeah, we do proof of reserves and transparency. We do things like donate 10% of our profits to Bitcoin core developers to support the ecosystem. We sponsor, Bitcoin core people. All of that is one way we differentiate, by really aligning ourselves with the values that this part of the market cares about. Not everyone cares about that. Some people care more about BlackRock's brand. That's fine, but that's one of the things we do. The other ways we try to differentiate, we have a 25-person sales team that all they do is talk to financial professionals about Bitcoin, whether it's up or down. And one thing we've seen since we launched in 2017 is we gain a lot of customers in the bear markets, because suddenly the big name firms stop talking about crypto because they have 1,000 different ETFs that they can sell. We have crypto ETFs. That's all we do. And so we're there to talk people through bull and bear markets alike. And then, we lean into education, right? We do things like we wrote the CFA's Guide to Crypto. We didn't get paid for that, but that's a way to help grow this ecosystem. I do think the market is going to be more stable in the past. I think some of the factors that drove that boom and bust are now diminished. So an example of those, I think the impact of the halving is smaller, just mathematically. It's half as big each time. I think if you look at the interest rate cycle, we're at a different point in the interest rate cycle than we were in the 2022 and 2018 bear markets when interest rates were going up. Now they're liable to go down as up, right? So that's a different situation. And I do think that the advent of regulation will reduce the blow up risk that has been the catalyst of so many sharp pullbacks, right? If you go way back in time, what caused the blow up in 2014? It was Mt. Gox collapsing. What caused the blow up in 2018? It was ICOs being shut down. What contributed to the blow up in 2022? It was a cavalcade of disasters: Luna, FTX, 3 Arrows Capital, etc. Now that we have, and as we get better regulation, you would expect that to be reduced. And then at the same time, you do have institutions turning towards crypto. And unlike retail, they're battleships. They're not speedboats, right? They take years to turn. One of my favorite statistics and most painful statistics is the average Bitwise customer allocates after about 8 to 10 meetings. If you think about what that means for a pension fund that started looking at Bitcoin when the ETF launched, they haven't gotten through 8 quarterly meetings yet. That's the speed. They'll get there in 2026. So I do think for that reason, the cyclicality will be compressed. There'll still be volatility, but I don't think we'll see 70% drawdowns. It's alt season in the traditional capital markets for sure. Bitcoin treasury, ETH treasury companies, IPOs. I think that's part of it, Andrew. And part of it is like, look, a lot of people moved into the market when Bitcoin ETFs launched in January. The traditional alt cycle was like people would buy Bitcoin, it would go up, they would get wealthy, and then the capital would flow downhill into riskier assets. People bought Bitcoin ETFs, they got wealthy, and the capital is flowing downhill into riskier assets, but within the TradFi ecosystem, because that's where that capital is, right? And that's part of what explains why we're getting ETH treasury companies and now sold treasury companies and everything else. It's the same altcoin cycle. This isn't my idea. I've borrowed this idea from Scott Melker, but I think there is this TradFi altcoin season going on.
Yeah.
There are a number of really interesting projects that are overlooked. I think there's a quiet DeFi boom that's being overlooked to tie into the title of this. You look at Uniswap volumes versus Coinbase volumes in Q1, they were higher. Never happened before. You look at what's going on Aave, right, through the moon. You look at Ondo. So I do think there are pockets of the altcoin market that are being overlooked because the hot ball of money can't get to them. And I'm pretty excited about those pockets.
One of the big predictions Matt made for 2025 is that at least 5 crypto unicorns will go public. That's not just a guess. It's already starting to happen. Companies like Circle and eToro are in motion, and other major names like Kraken and Chainalysis are lined up. Matt explained that this wave of IPOs was delayed for years because of regulatory blockades. Circle, for example, tried to go public multiple times, but the SEC blocked it until now. Once the environment shifted, these companies rushed to go public. Circle's IPO was 25 times oversubscribed and has already gone up 8 times in price. Now, that kind of interest doesn't happen in a dead market. What's driving this interest is the same thing that's always driven markets: demand. Matt said financial advisors and institutions want crypto exposure, but many still aren't comfortable owning tokens directly. So they're turning to public companies that build in the space. Companies that offer a safer, more familiar way in. That's why crypto equity ETFs and IPOs are gaining steam. Another key point Matt made is about stablecoins. Just a few months ago, most investors didn't know or care what a stablecoin was. Now it's being talked about on CNBC. Sell-side research analysts are covering it. Stablecoins are entering the mainstream because they're easy to understand. They are like dollars, but faster and more global. Matt believes this simplicity is helping traditional investors finally get crypto, and that's fueling a bigger shift in how people think about the tech. Let's watch more clips from Matt's session for more insights.
There's been a real vibe shift on Ethereum, to use your word, Alex. I think it started when the Ethereum Foundation replaced its leadership, which happened earlier this year. There was a recognition that it was moving too slow, that it was too ivory tower and not enough real world. And they started to gain momentum. And then you're right, Tom Lee came on board and packaged it in a great marketing scheme, as he always does. Tom's a good friend of mine. And talked about Ethereum as the stablecoin chain. The other thing that's going on beneath the surface, though, which maybe doesn't get talked about enough, is if you think about why Bitcoin has done so well over the last 18 months, it's been a really simple story where ETFs and corporations have bought something like 5x the new supply.
Yeah.
So there's been more demand than supply. Well, actually, since the start of May, ETFs and corporations have bought 32x the supply of Ethereum, because we've had this huge growth in Ethereum ETP flows, right? They did, I think, $5 billion over the last 8 weeks. And we've had this huge growth of corporations buying Ethereum. So the same sort of supply demand story that drove Bitcoin for the last 18 months, and Ethereum just kind of sat there and went down, is now happening in Ethereum. So there's a vibe dynamic and there's the supply demand dynamic. And you have to ask yourself, will these vibes continue? Absolutely. Stablecoins and tokenization are going up and to the right from interest levels. And then will the supply demand dynamics continue? I think absolutely. Ethereum inflows don't look to me like they're going to reverse. And these ETH treasury companies are trading at something like 2x their NAV, which means there's going to be more of them. So at least from the short term, I think the trends we've seen since the start of April really are going to persist in ETH, and I'm pretty bullish, and I think it'll get to new all-time highs. I got yelled at by the Ethereum community for forecasting it could top 5,000. I got all these angry emails. I was like, guys, it's at 2,500. This is a double in 6 months. That's bullish. What are you talking about?
Not for crypto people.
Yeah, crypto people. Yeah, 100% in 6 months.
100% in 6 months.
Is bearish. I don't know about 15K. I mean, that's extraordinary. I would love for him to be right. I am more tempered than that. I think we get above new all-time highs. I think it may well outperform Bitcoin through the end of the year, and I'm very bullish on Bitcoin's price. But I don't know that what is that, a 4.5x from here? I'm not sure that that's in the cards. But I do think the trends are all in its favor. Supply-demand dynamics, stablecoin and tokenization interest. I think it's a very bullish outlook for Ethereum. Maybe not Tom Lee bullish, but very bullish. When we think about Coinbase's or Ethereum's long-term valuation, I think you need to treat it akin to how you treat a cyclical stock, which is effectively to blend the earnings across a full cycle, right? Particularly because crypto has been so cyclical. I think it'll be less cyclical going forward, but you can't just look at peak earnings because, as you said, valuations would look cheapest at that point. If you look at Coinbase historically, if you blend earnings or maybe do an exponential weighting of blended earnings over the last 4 years, I think you get something closer to its true valuation. I don't know if you're familiar with the CAPE statistics that Professor Schiller used to put out about the stock market, but he would look at price to earnings across like a 10-year period. I think in crypto you have to do something similar to that, or you can take the approach that's equally appealing to me, which is we're still in the very early phases of this, right? And so what matters is market share. To Alex's point, a lot of activity is taking place on layer 2s on ETH. It's very dispersed. But from my view, the ETH bet is that a huge chunk of the world's money and assets will move over ETH. That's the bet you're making. And if that's right, it's not a $400 billion asset.
Yeah.
Right. It's a $4 trillion asset or something above that. And that's like enough valuation work. Really, I can do the DCA stuff. I can do, but in the end, that's the bet I'm making when I buy ETH, is that this will be the rails for most of the world's money and assets, the same way the internet is the rails for the world's communication. And boy, will that be valuable. So I sort of think you can take either approach when you think about it. Before I joined Bitwise in 2018, I was CEO of ETF.com and spent more than a decade in the ETF business.
Yeah.
And people ask the same questions when the gold ETFs launched in 2004. Will this cannibalize other ways that people purchase gold? Will they stop buying gold bars and coins? And what we saw was gold ETF assets went up substantially. They eventually got above $100 billion. And the number of people buying gold coins and bars also grew 3 or 4x. And the reason was that the ETFs helped make gold a mainstream institutional asset. So it dramatically broadened the market, and people found all these different ways to add in. So I think what Bitcoin ETFs have done is they've helped push Bitcoin into the mainstream of institutional adoption, dramatically widen the pie. And yes, of course, some people will find these other ways to gain exposure. They want the levered style exposure that MicroStrategy provides. But we're not sad about that at Bitwise. In the same way, I compete with BlackRock, and I wish I had their assets and their Bitcoin ETF. But BlackRock being in the market has grown the market for Bitwise as well. So at this point, it's just about growing the pie, and I think that's what's happening with these Bitcoin and ETH treasury companies.
And that brings us to Ethereum. For most of this cycle, Ethereum lagged behind Bitcoin. It was overlooked. But recently, that's changed. Matt said the turning point came when the Ethereum Foundation replaced its leadership. The network started moving faster. Then Tom Lee came out and called Ethereum the stablecoin chain. That framing helped rebrand Ethereum for a mainstream audience. But it's not just hype. There's hard data behind it. Matt pointed out that since May, ETFs and corporations have bought 32 times more Ethereum than the new supply being created. That's the same supply-demand imbalance that pushed Bitcoin's price up over the last 18 months. And now, it's happening with Ethereum. Bitwise sees inflows rising, and Ethereum treasury companies are trading at double their net asset value. That signals more demand is coming. Matt is bullish on Ethereum hitting new all-time highs. Maybe not $15,000 like Tom Lee predicted, but he believes Ethereum could outperform Bitcoin through the rest of the year. The fundamentals are there. Rising demand, growing usage, and an increasing role in the financial system. Around 90% of stablecoins and tokenized real-world assets are already built on Ethereum. And as Matt said, if you believe the whole ecosystem will grow, owning Ethereum is like owning a piece of the internet itself. But there are still challenges. Ethereum's main chain has scaling issues. Most of the activity happens on Layer 2 networks. That creates complexity. However, the direction is clear. Ethereum is where most of the innovation is happening. And for investors who want broad exposure to crypto's growth, Ethereum might be the simplest way to get it. Now, Matt addressed the broader question. Is crypto finally ready to move past the boom and bust cycles? He thinks yes. The triggers that caused past crashes, such as Mt. Gox, ICO shutdowns, and FTX, were all signs of a fragile system. But with regulation improving and institutions slowly entering the space, he believes the market is stabilizing. The drawdowns may still happen, but they might not be 70% like before. And as more capital flows into crypto through regulated channels, the growth may become steadier. There's still a risk. The altcoin market hasn't seen the same capital inflows this cycle, but Matt sees that as an opportunity. Projects like Uniswap are seeing higher volumes than Coinbase. Save and other DeFi names are growing quietly. The hot money may be tied up in IPOs and ETFs, but overlooked parts of the crypto market may be next. Now, crypto is no longer just about price. It's about infrastructure, regulation, and adoption. And if you believe Matt Hougan, this awakening on Wall Street is only getting started. Thanks for watching, and don't forget to like and subscribe.